Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. Palantir stock is red today, and it's red after a pretty red day yesterday, which was red from a pretty red day on Monday. Palantir today is at $17.12. It's down 6.39% of the day, down another 0.06% in after hours. So today's episode is going to be primarily focusing on what has happened this week, what has happened today, because I do believe there was a catalyst today that was very obvious for why the stock fell. We're going to be talking about that. We're going to be talking about the Titan contract. It's a $1.5 billion contract that Palantir is in the final stages of winning. Got an update on that we're going to be discussing. And then finally, we're also going to be discussing a new partnership Palantir had with HISA. You might not know what HISA is. We're going to talk about what HISA is. It was a press release that didn't go on their website, so it was underlooked by most people, but we're going to be getting into that today. Let's get into it. All right, so before we get started, today was a rough day. Today was a rough day for Palantir shareholders. I know it was tough. I mean, when you're bullish on a company, it goes down 6.39% after being down 10% 2 days before. It's just not fun to see that happen. I think I speak for everyone saying that there is a part of all of us that is happy it's going down because we get to accumulate more shares. And then there's another part of us that's like, why is it going down and how bad can it get? Because it's like, I want more shares, but like I'm fine with taking more. But why exactly am I getting this price given the run-up that we saw? And I think that's kind of what we're all feeling. So I want to have a discussion on that. First of all, the stock price right here is $17.12 after hours, down 6.39% on the day. It was at $18.12 or something, $18.30 at the beginning of the day, and falling pretty badly to $17.13. Palantir, if you zoom out, still up more than 150% year to date. $21.85 was the top, and it is down now from $21.85 to $17.13. Now, what was the reason for why this happened? Very simply, this press release that came out this morning, I was actually at the gym around like 6 a.m. this morning, and I found this press release. Someone tweeted it to me on Twitter, and I was just like, well, that'll do it. And actually, originally, I didn't think it was that big of a deal until I actually calculated how much 86 billion yen are, and I realized it is a big deal. Japan Sampo Holdings spokesperson sold part of its stake in Palantir Technologies for an undisclosed sum. They booked a profit of 86 billion yen. I didn't think much of it in the gym, and then when I did the math, that's $584 million of profit, which means they sold a decent amount of shares. I mean, that's almost $1 billion of profit that they took. Now, who is Sampo Holdings? Before we go back into this, this is the largest insurance company in Japan. Palantir has had a partnership with them, and Sampo Holdings has been one of their largest investors since, I think, 2018, and they formally really started something back in 2020 with a $500 million investment right before the U.S. firm went public. So you could imagine those shares were at like $6 to $10 right before the DPO. You would imagine that's where they got priced in for those shares. So if he sold at like 17, 18, about 2-3x he's made on those shares. This spokesperson that represents the Sampo Holdings that sold out of Palantir today. Palantir in February also signed a $50 million expansion agreement with Sampo, which is also Palantir's customers. So a lot of people were talking about, oh, well, you know, maybe that means Sampo Holdings is not using Palantir anymore. That doesn't make any sense because 7 months ago, they signed a $50 million expansion in the partnership they're doing because Sampo Holdings operates within a variety of insurance companies. Palantir works with them. One of the most notable examples is elderly people in Japan are taken care of very well, and they have a lot of different nursing homes throughout Japan, and Palantir software operates and powers a lot of the beds that track the sleeping patterns of those elderly people. And in one of the case demos that I saw on their channel, Palantir was able to actually recognize why certain older people are sleeping more or less than they should, and they're able to track it towards things that they're eating throughout the day, and as a result, be able to make better decisions, right? Get better intelligence for how that person should be treated, whether they should take more medicine, they should be eating more, etc. Literally the stuff between life and death, right? This is why the technology is so impressive. That's why Japan really wanted to invest in them. In 2019, Palantir launched a 50-50 JV with Sampo called Palantir Technologies Japan to service the Japanese government as well as commercial clients. So Sampo and Palantir have had a great relationship. They've worked together for a long time. So seeing, you know, the profits that were taken this morning, it was surprising because I mean, almost $500 million in profit, more than $500 million in profit is a decent amount of profit. So that means you have to sell, you know, a decent amount of shares. I don't know the exact number, but that's a lot of money. Is it enough to tank the stock? I think there's two things that compound on this. Number one, the street's really, I think, in a conundrum here because it's like they want to hold Palantir, but they also know they need to take some profits. And let me give an anecdotal experience that I think will add a lot of value to people. I got invited by a New Jersey $100 million investment firm I live in New Jersey, in the United States, about 7 months ago to go visit their offices. They were holding Palantir. Palantir was at $7 at the time. I think they had just finished Q1 or Q2 earnings. And the guy who runs the fund, like I'm in the office with the guy who runs the fund, like the guy, and one of his associates. He's like, "What's going on?" And they wanted to know my opinion about it. And I just said, "Look, the market doesn't get it yet, but gap profitability, things are in the right direction. Yeah, I know the growth isn't there, but if you believe in the narrative, right?" I kind of gave my spiel on what I think, why the valuation is where it is and why it's undervalued. And he agreed with me in his heart of hearts, the guy who runs the fund. And ultimately, he was kept giving me negative reason after negative reason for why he's so upset at the company, why he thinks the company should be higher, why he thinks management is a big issue. And then obviously the stock goes higher and you stop complaining, right? But then I asked him, I was like, "All right, so are you selling?" And he looked at me dead in the face and he smiled. He said, "Nope." And I'm like, "Okay, so you just complained for 30 minutes, but like, so why now? You just said that you don't like what's going on." And he said, "Because I believe in this company." And so, then we get into a more fun discussion. And then one of his associates said, "Look, the biggest problem we're going to have when the stock gets to 20 and we know we're going to have this problem is calling our clients and convincing them to not sell because their clients got in around 2018. This fund ended up investing in 2018 where shares were about $5-6. So shares get to $20, they're 4x up on the shares. They have clients that they need to be able to book profits for." And he told me, "The biggest problem we will have when the stock goes to $20 is convincing our clients to not sell." And they have a fiduciary commitment, right, to be able to do what their clients want them to do. So it's ultimately a debate when you're a fund manager to try to get your clients to see your vision. And if those clients trust you, then you're allowed to keep doing what you're doing. Palantir got to $21, and I'm very curious. I have not hit those people up again if they sold. But the reason I give this example is because I think they're on a smaller level with a $100 million fund. There are much bigger funds that are thinking, look, the stock's up triple this year for whatever reason. And there's a variety of reasons why I think the stock has tripled this year, but it is tripled this year. AI being a big component of it, gap profitability. There's a lot of different catalysts. Do we sell? Do we take some profits? Do we book some profits in? And I think given it's the first week of December trading, and this is what we saw on Monday as the stock started to decline because it was the first week of trading in December. I think a lot of institutional investors, I don't think retail is tanking the stock 15% in a week. I just don't think that's happening. Not on a 2 billion share float. I think some toots are like, you know what? We got to take some profits. And what Sampo Holdings did today was say, hey, we're up, a lot of money since 2020. I mean, it's the end of the year. We should probably take some profits. And so that is the extent of what I think is going on. I do not think it is a big deal. I think we could see 15. I think that is possible. If you look on the technicals, there is a gap fill at $15. My buy price, I have said publicly on this show and every day on the morning open stream that I'm live 8:45 every single morning, a.m. Eastern Standard Time, every single day, because we talk about Palantir every day, 15 and below is my buy. Having said that, I did nibble 20 shares yesterday at 18.30, and I nibbled 50 shares today at 17.44. So I nibble. To me, those are not big buys. There is dry powder that is waiting, ready for 15 and below, and that is when I load the boat, and I am not kidding about that. I am ready to buy. But, I nibbled here and there because it was just like, whatever, let's just, get a couple of shares here. So if that happens, and this is the next part of the discussion I wanted to get into, which is if that does happen, it's like, are you mad that it gets to 15 or are you upset? I mean, here's my philosophy on this. If you weren't selling at 20, if it gets to 15, then it's like, you obviously, it's like other than looking at your paper gains and getting excited for them, if you're in this company for the next 10 years, you really think it's a 2030 story, you really think it's a $200-400 billion company, right? You really believe in that bull case, you should want more shares if it gets down to that 15 and below level. That's just personally how I feel. Maybe it stays at 15 and below for the next 2 years. Maybe it's flat. Maybe it runs up to 30 after it hits 15. Like, no one knows what's going to happen, but I do know that if it gets to that level, for me, this is my personal opinion, I like buying at that level. That's where I think the valuation becomes just sweet enough for me to see the upside. Before I think a lot of people liked $10 to $12. Maybe that could happen. I don't think that's going to happen. So 15 and below for me is where I get really excited. So I think it's a conundrum that all of us retail investors are dealing with, which is like, look, we want more shares of the company. We believe that the company is going to be amazing, so we want to accumulate more shares, but we don't want to see it go down. I think the easy answer to that is, dude, if it goes down and you weren't selling it and you weren't taking profits and you're not trading, literally you have zero reason to be upset. If you're holding Palantir for the next 10 years and it's down from 20 and your average was like 11 and you saw, $9,000, $10,000 worth of gains and that gets cut down to $5,000, but you get a chance to accumulate more shares, do you think the stock will be $20 once again? Do you think it will be more than $20 once again? And if that's the case, then, you have to make a decision on, do you want to average up? Do you want a DCA? Do you want to accumulate more shares? I think the next couple of years is really share accumulation period. And really share accumulation period was at $6, $7, $8. And a lot of people accumulated a lot of shares and they have their position set and ready to go. And they're just sitting back and relaxing. Other people that have higher averages like myself around the $15 range, I want more shares. And if I were able to get more shares, I wouldn't be the saddest in the world because I believe the narrative around this company. And I also think that the street will get it wrong if they tank them that much, and not really get them wrong, but more so the street will just have taken their profits, which is inevitable. When a stock's up 200% year to date, you're going to take your profits, and that'll create another buying opportunity for me versus having to buy at $21. On top of that, I think that insiders selling at $21.85, Peter Thiel sold 2.4 million shares for his fund. Karp sold like 900,000 shares. Sham sold 500,000 shares. Stephen Cohen the other day sold 500,000 shares. David Glazer. These people, the CFO, they sold, right? And I think it's because their financial advisors told them, look, the company is at a very rich valuation right now, or at least it's at a very attractive valuation for you to take some profits on these shares that you're sitting at that are like 17 cents or per share or whatever they paid for them, or maybe a couple bucks, right? And so like they took some profits. It is what it is. It's not something that I'm necessarily upset about, because when a stock runs this much, that's what happens. If the stock was flat at $8 all year and then you see insiders dumping it at $8, then it's just like, what the heck is going on? The stock was not flat. The narrative changed. Institutional investors changed. People started getting excited, and as a result, the stock went up. So in my opinion, I am not sad if the stock goes down because I want to accumulate more shares. I am excited to get more shares. I would love to pay 15 versus 17 or 18. So we'll see how low it gets. We'll see, does it get into that $16 range? And then I have to make a decision on, do I want to jump the gun earlier? We'll see what happens. We'll figure it out. But I do think if you're struggling with seeing the stock go down, the one mental mindset to have is that if you really are in this for a long time, if it's not a trade, if it's a trade, I can't say anything. But if you're in the company, if you're invested, you believe in the mission, this is the stock that you want to pick as one of the stocks you have in your portfolio to be that position, then it's about share accumulation. And that means if you can get a better average, then if it goes lower, then to me, that's not the worst thing in the world, because you get to accumulate more shares. So that was discussion on the share price. Let me know if you have any questions or thoughts below. Sometimes when we have a red day, I like to have a community session. I mean, when the stock went to 20, we had a nice community session in the comments. When the stock goes down about 14% in a week, we should also have a community healing session. So let me know your thoughts in the comments. Do you agree with what I said? Do you think that doesn't make any sense? Are you just annoyed that the stock is going down? Put it down in the comments and we'll have a discussion there. All right, next quick thing I wanted to talk about, update on the Titan contract. So this is a contract that is going to be worth about $1.5 billion. We've talked about it many times on the channel. It is a very sophisticated defense contract for the military, high-level software, high-level hardware, a lot of technology involved. Not going to go through the entire thesis of the contract, but it is a big contract. It's worth $1.5 billion over like a couple of years, and Palantir is in the running to get it. The contract will be announced January to March 2024. That is the announcement for today. We thought it was coming at the end of the year. Every day someone hits me up and says, when is the Titan contract going to be announced? Palantir thought it was going to happen at the end of the year, which is what they told us a couple of months ago. Now we got a report saying it's not happening at the end of the year, which I expected because it's the government. It's probably going to happen January to March 2024. So that's when we have to watch out for those catalysts, which also goes back to why the stock is selling off. There's just not another catalyst left in December of 2023 to be able to pump the stock, to get investors excited. It's going to take until next year for that to be the case. This is a contract that Palantir has partnered with North Grumman Group. I'm definitely getting the name wrong. Let me get the right name right here. Northrop Grumman. I'm saying that wrong. I'm sorry. And Anduril Technologies. So these three companies, and Sham talked about this on the Q3 earnings call, are working together to compete against Raytheon and the partners that Raytheon has. Best case scenario, Palantir gets the whole deal. Base case scenario, Palantir splits the deal with Raytheon. So like Palantir gets $700 million, Raytheon gets $700 million, but then Palantir splits that with the other contractors they're working with. Or worst case deal, we lose the deal. I don't think we're losing the deal. This is one of those contracts where you need the most sophisticated AI technology on the planet in order to be able to operationalize AI on the battlefield through the hardware and the software. I don't think Palantir is losing the deal. I could be wrong. I think they're definitely going to get half of it insured with Raytheon, or they're going to get the whole thing. And so we'll know about that early next year. Okay, final topic I wanted to talk about is here. First of all, this is from the Daily Palantir newsletter. If you are not subscribed, let me give a quick shout out to it. It's a newsletter I write every day. DailyPalantir.substack.com. Link is in the description. Please subscribe. It's free. You get a newsletter every day. If you're a Palantir investor, there is no reason you are not subscribed to this newsletter, because if you get a newsletter every single day, 5-minute read, quick read, you get to know what's going on in the world of Palantir. I know some of you like watching these videos, but some days you might not want to watch the video. You might want to read a newsletter. You should just subscribe to this newsletter. It takes 3 seconds. Links in the description. Please subscribe to the newsletter for Palantir. Okay, so HISA, which I didn't even know was a thing, but it's a thing, and Palantir developed AI-enabled tool to help identify horses at increased risk of injury before they race. This was just like crazy to read because I didn't know this was a thing, and this goes down to the fact for why Palantir is just one of the most interesting companies in the world and why I think they're going to get a lot of clients when it comes to AI. So let's read a little bit from this. The Horse Racing Integrity and Safety Authority, HISA, has partnered with Palantir Technology, the leading provider of artificial intelligence systems, to create a data-enabled tool to assist industry stakeholders in identifying horses at risk for injury before they race. I didn't even know this was a use case of AI, but that just goes to show how crazy AI is going to be. The tool will generate a daily report for each racetrack, flagging any horses entered in that day's race who may present potential risk factors for the injury. This enables identification at at-risk horses with increased efficiency and accuracy and will inform the hands-on pre-race inspections of each runner. This project is one of the many innovative ways HISA is working with the world's top technologists to leverage the data it collects for continued advancement of equine safety, which makes a lot of sense for why they're picking Palantir. CEO of HISA says HISA continues to work with leading partners like Palantir to utilize data and technology in its mission to reduce equine injuries and fatalities. Our hope is that this revolutionary technology is used more effectively and efficiently in accurately identifying horses at risk of injury as part of the screening process for determining if they're fit to race. Ted Marbury, Palantir's global head of commercial, says Palantir is proud to support HISA in its embrace of technology to reduce equine injuries and fatalities. HISA came to a boot camp for Palantir's artificial intelligence platform this fall and has rapidly scaled its implementation independently. HISA is proving that real-world outcomes, in this case equine safety, can be achieved in weeks with the acceleration that AIP and boot camps can provide. Why was this so important to read? Because not only is Palantir working with a horse integrity and safety authority that I didn't even know exists, but it's real. Horses have races, and you need to make sure that the horses are able to do the race, right? And make sure there's not animal cruelty, all that stuff. Really amazing mission, good cause. Did not know it was a thing. Definitely did not know they would be able to use AI. Palantir got these guys as a client in a boot camp. Tomorrow's episode is going to be really exciting because there's a whole segment on boot camps that we're going to talk about, and it's going to be a really fun thing to discuss. But like, if anything is showing that the bootcamp strategy is working, it's a go-to-market strategy that shows Palantir's product. That Palantir product is then enabled within decision makers that are able to implement that product. These decision makers come from thousands and thousands of different diverse backgrounds and different companies. In this case, it was the Horses Integrity and Safety Authority that decided to come to a bootcamp and then make a deal with Palantir, and now they're paying Palantir for AIP, which is absolutely insane, the fact that that's happening. And so I think this bootcamp strategy is working. Tomorrow's video, you're going to see a segment that really legitimizes that it's working and validates that it's working. And as a result of it working, and as a result of Palantir being able to get more deals, it should mean that customer count scales and that ultimately revenue and growth is able to scale for Palantir. All right, that's it for me today. Thank you guys so much for listening and watching. Let me know your thoughts on Palantir's stock price declining over the past couple days, and we'll talk about it in the comments. Thank you guys so much for listening and watching. I'll see you in the next one.